Monday, March 20th, market analysis, Stan Ehrlich. We started out with the stock market indexes, of course, every recording, and usually the S&P 500, the SPDR, specifically the SPY, the tradable ETF. So what do we got? We've got a price range today that's very important. Frankly, the last week or so has been extremely important. A little over a week, more likely. So what happened? Well, we opened a little bit higher this morning, not much, about a point. And right away, we slid back down to approximately unchanged. And remember, Friday was not a particularly good day. Friday, we went down quite a bit, but we didn't get below Thursday's low, which wasn't below Wednesday's low. Now, Monday of last week, exactly 1 week ago, is the key here. It dropped, and you'll look at this right side of your screen on the daily data chart. On Monday, we dropped into a support area that I've colored green, about the middle of it. 380.5 was the low, and close to the opening, which was a gap down. So I think I was talking about a downside exhaustion gap on that day on my recording. I'm pretty sure I did. That's the oversold condition, second day. That's the bottom now a week later. And guess what? We are now decent 3.5 points higher, which is not a lot. A lot of elbow room to go up, a lot more. My custom RSI is only at 49, right in the middle of 0 to 50, 100. So tons of room for more rally relevant to RSI levels. And we're close to the high of the day. And this should be, I hope, at least the second highest close for the last week plus a day or two. Frankly, a week and 2 days since this bank crisis stuff started affecting the market, essentially. So what marketplace is telling us that hopefully that bank problem is over. We sure as hell don't want a repeat of the subprime loan crash we had in 08, 7, 8, and hopefully learned a lesson. Anyway, I'm very optimistic at the moment. We do have to stay at these prices. We do have to climb some more. And in the next few days, I hope very much so, before the end of this week, today's Monday, we're going to see prices above last Thursday's high, and that was 396.5. We're 93.5 at the moment. So only 3 more points, and we're up 3.5 right now. Hey, so 6.5 higher is going to challenge the high of last week, which is going to be a potential new high for a week and 2 days, and gaining some very significant ground. You realize we're already about 10 points higher than last Monday's low. So that's looking pretty darn good, actually about 12 points higher than last Monday's low, which is pretty good, but it took a week to do it. So I think we're on our way up, and I like what I see. That perpetuates my long-term point of view of seeing this bull market of 2023 perpetuate itself. Very sorry to say the head and shoulder bottom didn't work out as I was hoping. It just violated too many rules for too many days, so I abandoned that. But the lows are higher over time since October 13th, which was again a October low, seasonal, and a whopping fantastic bullish green engulfing buy signal, which, by the way, we could have another bullish engulfing green if the other indexes start making it above Friday's high. The micro E-mini and the E-mini can do this because they got below Friday's low this morning. And the market was oversold within the number of allotted days backward in time. Unfortunately, the spider can't do the job because it never got below Friday's low. Okay, enough of that. I like what I see. I'm very optimistic at the moment. I want to see new highs, and that would be approximately 4 points higher for the day, and we're up 3.58 right now, very close. That could take only a minute or two, real quick. Let's go look at DIA, the Dow Jones ETF and tradable, and we're going to see that we're well above Friday's high, getting close to Thursday's important high, and that would be a significant amount of progress. But keep in mind that both the Russell 2000 and the DIA have done very poorly and have made new lows only Wednesday of last week. Yeah, it was oversold, saving grace, I suppose. And so they're making progress, but not as quickly and not as nice as the QQQ, which is doing the best by far and away. Right behind it's the S&P, and the DIA and the 2000 have a little problem, but they're coming along. So I like what I see across the board. Let's look at the QQQ. It's already sorry about that. The QQQ has already made new highs since, and that was on Friday, since February 15th for a month. If it can get over Friday's high, which is the highest high for a month, it's going to be very, very close to making potential new highs going back to when? Oh my goodness, September. Actually, it's going to be August 26th. That is extremely profound. That's a new high for basically 6 months on the QQQs, if it can get above the high, which was made on February 2nd. And we're not that far away from it. All right. Let's look at some futures contracts. And we've got some new signals this morning. I'm going to start out with the OJ, which has been forming a pennant formation and still is a little sideways in the last week or so. Watch for breakouts. Usually a bullish continuation formation, but not always. Next, we have new lows the last day or two for a couple of months and got oversold. So we're bouncing a little bit, kind of a sideways to a little bit lower tendency here. So I'm neutral to a little bit bearish on soybeans at the moment. Next, live cattle, same kind of comment. I've started at the rear end and going to go to the front, so I'm going to go through these pretty quick. I want to get to the ones that are important to me. Cocoa has had a very sharp rally right out of an oversold condition. You got to know, I love this overbought, oversold Wells Wilder index. I've learned how to use it over the multiple decades, and I learned it from Wells Wilder himself in the 1980s. Next, hogs. Oversold, probably going to rally a little bit, but bear market, sell a rally short. Next, the E-mini did get below Friday's lows. Not quite last Thursday, not particularly important. It was oversold within the allotted number of back days. If we can make a new high above Friday's high, we will get a green bullish ER buy signal. That will be very encouraging to me. Gotta love them. Remember, the last whopper was on October 13th. Listen, the strategy, the ER signal, is built to pick turning points in the market, including the highest high and lowest low for months before and months after. October 13th of 22 is a perfect example. Those huge turning points only happen, what, twice a year, once a year? And to pick them, turning red and green, red sell signal, of course, green's buy signal, is not going to happen often. Period. Okay. I like what I see. If it turns green, I'll be very encouraged. It's not going to be the lowest low for this particular break, and it's not going to be like our October low, but very, very encouraging. Bullish. Next chart. Wheat. Got oversold, rallying toward a little resistance, probably a short sale soon. Next, soybean oil is a brand new today buy signal in progress. Not particularly too late to be a buyer. Remember, every time we get green or red, we get an ER1 entry into a new long or short. ER3, our other strategy, needs a little retracement in order to get into the trade, and sometimes misses and doesn't get in, but ER1 is always in for better or for worse. We did pick a great low here in soybean oil back on December 12th. It went up for a month, pretty good, but not the lowest low or highest high for many, many months. Next chart. Natural gas. Long-term bear market. We got the bottom of the trend for a green buy signal on February 22, but it's coming very close to being in serious jeopardy here. What's the trend? The trend is down. Yes, the green sometimes is the lowest low for months and months to come. This may not be one of those cases. Now, we had plenty of elbow room to make a damn good profit on this. And if you're still long, sorry, but my strategy would never hold the trade quite this much of a downside correction after the buy signals. Next chart. Heating oil. Oversold on Thursday of last week. Came down, a little retracement, now around unchanged. I don't know, probably neutral to bearish very soon. We picked the top of the rally, which was a pretty darn good one to the exact day, and then another sell signal 3 days later. We almost got the top of that move, and yes, we did get the top of the move on June 17th of 22. The bottom, we got close, profitable trade for a few days, etc., etc. Next. And also, if you want to contact me, info@ersignals.com, and I answer that email address personally. We're oversold again in this chart, crude oil, and now I'm in the energies, and we have bear trends in the energies. We have a downside breakout last week. We get oversold, so we're probably going to start a rally very soon. You know, be careful. If you're short, these rallies from oversold conditions sometimes go up very, very quickly, very sharply, and eliminate the oversold condition, bumping against resistance above the market, which is exactly what I expect this to do, a little over 70, and then turn right back down again. That could all happen this week. It's only Monday. Next chart. Corn. A major downside breakout a couple of weeks ago. I talked about that. We got oversold, and this rally has come back up to resistance and is starting to turn back down again. I'm bearish. What can I say? Next chart. We got the bottom of the market in silver and gold and platinum. Here's the bullish engulfing on the third day of a little tiny 3-day double bottom formation, and up we go. Today is a new high, and probably a new high since the buy signal. I don't know what they'll say. Next, platinum. Oh, I do know what to say. Platinum's about to do the same thing. Next, gold. We got the low on a double bottom. It's the lowest low of the two lows. It got a little scary when it came down close on March 8th to the buy signal low, which was on February 28th. And I'm not implying that we buy the low of the signal. We don't. But we do get in the day of the green and the day of the red and the day of the green and the day of the green, etc., etc. Next chart. Bonds. We bumped against the resistance again on this morning's rally high. The market has turned down in the futures for the 30-year long bond. It's overbought. It's yellow today, 2 days, 3 days, 4 days, 5 days, and 6 days ago, it was also yellow. We're not going to be able to break through this resistance area, I don't think, immediately. In fact, I think this week is probably going to be sideways to a little bit lower. That doesn't help my stock market prediction of new highs. So that's not particularly good, the correlation. Let's look at the 10-year notes. I'm bullish on this. I think it's building a long-term bottom on 10-year notes and 30-year long bond. But at the moment, again, it's gotten overbought against resistance, and that implies it's going to have a little bit of a retracement down. Next should be 10-year notes. It is. Same story here. But did we make a higher high today? Oh, that is so close. It is almost exactly the same high we had before. Classic technical resistance at a previous stop. And now we're down on the day. I hope we don't have a red bearish engulfing, which would be a little more bearish than I'd like. I just want it to stay, a little bit lower, but not below yesterday's low, Friday's lows. That would not be good. Then I'd have to be a little bit more bearish and kind of expect it to test the lows of a month ago. I don't want that. So let's just stay where we are or go up. Base building activity, long-term bottom building, in my opinion, waiting for a great buy signal. Haven't had one lately. And we did get the top of that rally back in August 2nd of 22. And that was a very, very profound sell signal. The highest high for 4 months and the highest high since. And that, again, was August 2nd of 22. Next chart. OJ. We started here, pennant formation. I do have to touch a little bit on the forex markets. The euro is going sideways with a tendency for up. The longer term trend is up, and yeah, we did get the bottom, the exact low day, September 20th. Who doesn't want to buy the bottom of the market for 6 months and for the next 6 months? I don't know. I sure do. So good trade long term, obviously. System is not necessarily built for staying with the trade that long, but it can be altered. What we call a kicker, which is the way we move our protective stop, can be easily, with a keystroke, altered for investors, long-term traders, and therefore the trailing protective stop moves a lot slower, whatever speed you want it to move at. It's not a moving average, but you immediately might think of that, but it's a different formula. If you want to trade on a shorter term basis, you obviously tighten that stop up. And when the trade moves in your direction, even a half a day worth, or just a 2 or 3 days, you're starting to lock in a profit. All along the way, you're starting to lock in less and less and less of a loss until it turns to a profit with a short-term kicker. Now, kick the can along the whatever. Next. DIX expecting to see the exact opposite. So we're slipping, minor new low, good. And we got the top of the market to the exact day with a red bearish engulfing September 28th. And the Japanese yen, US dollar to the yen, is a sell signal we had just last Wednesday. It's working fine. We have a new low and probably a slightly new low close today, but it's not closed yet. And oversold condition implies we don't have too much lower to go at the moment, and we're about to have some sort of a short-term rally. But it's the first day oversold and just barely, so we could work our way a little bit lower first, and then maybe come back to about where we are right now, and then down again. We got almost the bottom of the market on that buy signal on January 18th. And yeah, hell yes, we got the top of the market October 21st, the high day for I don't know how many months beforehand and ever since. Okay, I'm going to quickly touch on sectors because the banking sector is a primary group here lately, and obviously lately. We got a buy signal on Thursday. So far, so good. And that's KBE. That would be the Spider S&P Bank ETF. XLF, same thing. Thursday, we got a buy signal. Now, they're not working real well yet. But again, we want to see the S&P get more than 4 higher, and we're up 3 1/3. So we settled back just a tiny bit here in the last few minutes. XME, no signal, but it did get oversold, and it gapped down for a downside exhaustion gap early last week. So far, so. I need to see it rally more, but this is how to start. OIH, gap down, exhaustion gap. We had a buy signal, but it failed miserably. So that was one of my bad signals right away. But again, we never lose a lot because we have a tight stop to begin with, let alone getting tighter faster if you wish, or a lot slower if you're a long-term investor. Now, XLB, oversold, rallying, looking good. XRT, basically the same comments, but not coming up anywhere as near as well as the other symbols we've looked at so far on the sectors. XLK, new high, short term and intermediate as well. Well, you could say long term since last August. Yep, last 6 months. So I like that, but that was Friday and it didn't close very well. So it pulled back a little bit more today, but it's holding its own. It's only down just a tiny bit. I expect to see new highs on a closing basis above Friday's highs very soon, probably this week. And lastly, I'll go to XLV. Buy signal on the bottom of the break, and that was March 13th. Great. I keep mentioning that we sometimes get buy signals and sell signals clustering. That would mean 2, 3, maybe even 4. I don't think I've ever seen 5 in approximately a month or less. So here's 2. The second one seems to be doing extremely well. The first one did okay. Remember, this is plenty of room. It's the speed of the rally as well as the amount. So time and price are the only 2 axes you've got. And if the time is short and it rallies a lot, we have a profit, probably. Now, that's it. Have a great trading day. Let's keep this market strong. I want to see it closed at least above 394, and we're only half a point away from it. Above 396.5 would be fantastic. Talk to you tomorrow.